Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money world, and let's just say California BanCorp might be trying to put a new spin on things. So California BanCorp, or BESL as you might know them, just dropped a bit of news on July 28, 2025. This isn't a full deep dive like a quarterly or annual report, but it's still important stuff. Think of it as a quick update to let everyone know what's happening right now. Now, the first thing to note is that this filing tells us they're an emerging growth company, and a big part of that is they're choosing not to use a special extended deadline for new accounting rules. What this generally means is they want to be seen as nimble and up to date with how they report their finances, which can be a good sign for investors who want clarity. The main reason for this report, the core of it, is they've released their earnings for the second quarter of 2025. Now, this is where the real story lies. When a company releases its earnings, it's like them showing their homework, telling everyone how much money they made, how much they spent, and what their overall financial health looks like. They aren't giving us a whole lot of the nitty-gritty numbers directly in this document itself, beyond the fact that they issued an earnings release. The key takeaway here is that the actual financial details, the charts, the figures, the percentages are available in a separate document, an earnings release which is technically part of this filing as Exhibit 99.1. Beyond the raw numbers, they also dropped an investor presentation. This is usually a set of slides designed to explain those numbers in a more digestible way for investors. And it's also been posted on their website. So while this Form 8K is the official notification, the real meat and potatoes are in that earnings release and the accompanying slides. To wrap up the basics, the document is signed off by Stephen E. Shelton, their Chief Executive Officer, dated July 28, 2025. This confirms that the company's top leadership is aware of and responsible for the information being shared here. Now, let's talk about what this means. By releasing these earnings, California BanCorp is essentially telling the market how they performed in the second quarter of 2025. For us, as watchers of corporate finance, this is our chance to peek under the hood and see if they're growing, struggling, or just treading water. Even though this particular filing doesn't contain the actual numbers, it points us directly to where we can find them. We know they've released their second quarter results and an investor presentation. This tells us they are actively communicating their performance to the outside world, which is a fundamental requirement for any publicly traded company. Even without the specific figures right here, we can infer that the market will be closely examining these reports for signs of growth, profitability, and any potential risks. Are they beating expectations or falling short? Are their costs under control? These are the kinds of questions that get answered in the earnings release and presentation that this 8K is referencing. As a company that is still in its emerging growth phase, these quarterly reports are especially crucial because they shape perceptions and influence investor confidence. Looking broadly at the structure of this filing, it's a standard procedure for companies to use a Form 8K to announce significant events. And in this case, the most significant event is the release of their quarterly financial results. The fact that they've also released an investor presentation indicates they're likely trying to highlight positive aspects of their performance, or at least provide context for any numbers that might raise questions. From a Warren Buffett style perspective, we always want to dig into those actual financial statements. We'd be looking at revenue growth, earnings per share, profit margins, debt levels, and cash flow. Are those numbers improving quarter over quarter and year over year? Does the company have a sustainable competitive advantage? Is its management team competent and trustworthy? This 8K filing is the appetizer, but the main course is in the referenced exhibits. The company's decision to be an emerging growth company and not use the extended transition period. For accounting standards suggests a desire to be transparent and possibly to signal a commitment to modern accounting practices. This is generally viewed positively by investors. The critical pieces of information which would typically be found in the referenced exhibits 99 and 99.2 are those key financial metrics. For instance, we'd be looking for their total revenue to see if it's increasing and by how much. We'd want to know their net income, which is their profit after all expenses, and if that figure is also crevine, we'd also be analysing their balance sheet for assets and liabilities, particularly any debt the company might be carrying. The investor presentation would often break down these numbers with visuals and provide management's commentary on what drove the results. What we can surmise from this filing is California BanCorp is actively engaged in the process of reporting its financial health. They are doing what they are supposed to do as a public company. The real analysis, however, requires a deep dive into the actual earnings release and the investor presentation. Without those documents, we can only comment on the process of disclosure, not the substance of their most recent performance. Now, looking at these results more broadly, California BanCorp seems to be actively managing its disclosures, particularly with the accompanying investor presentation. Any significant risks or opportunities would be detailed within those additional documents. We would need to examine those to form a solid opinion on the company's direction. In conclusion, this Form 8K acts as a notification vehicle for California BanCorp's second quarter 2025 earnings release. It's a procedural step ensuring that the market is officially informed that financials are available. The true assessment of the company's performance and its future prospects hinges on the content of the earnings release and the investor presentation, which are referenced as exhibits to this filing. From an investor's standpoint, the next step is to find and analyze those reference documents to understand the company's actual financial condition and operational results. What's your take on this disclosure strategy? Do you think the focus on an emerging growth status and the use of external presentations is a good sign for investors? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate insights. And don't forget to join our Discord community linked below for even more discussions. Thanks for watching, and I'll see you in the next one.